So number one, look at the VIX. The VIX continues to decline. So even with the hotter inflation numbers today, this is interesting. We are seeing the VIX lower. Now the VIX is important because the lower the VIX goes, it means people are expecting or are fearing less and less. And the reason why that's important to gauge, and you can see the VIX is now at $13.16, that's really important because the lower it gets, the more something can shock the markets. And so in general, the lower the VIX gets, the more I'm likely in general to short the stock market, or I'm going to short major names in the stock market, especially if I see negative divergences. So this is something I'm paying attention to. If we look at the bigger time frame here and we go back, look at how low the VIX is compared to where things were. And if we go back, by the way, this is the COVID pop. So you can see when the VIX jumps significantly, you actually want to buy the market, right? If you bought here, this was at the dead lows of the COVID bottom, right? The COVID bottom was right down here. You would have made a fortune. So you use the VIX as a contrarian indicator, and you have to be very careful, right? You don't just want to blindly follow the VIX, but you say, okay, the VIX is down here. I'm going to start scoping out good charts to short. Maybe I won't find any, but I will start looking. It's kind of an indicator. Use it as an indicator for your general bias for the markets. Are you more bullish or are you more bearish? Now, what you're going to find is that the lower the VIX goes, the more bullish everyone else is going to be, right? I mean, right now, what are we hearing? There's more articles being written right now with soft landing or no landing than pretty much at any point in the last multiple years. That tells you everyone's expecting that. The more they expect that, the more they think, oh, nothing can go wrong, and then one thing pops up and things start to cascade.